Welcome everyone to another episode of Financial 15. Kevin and I are ready to go. And we talked about OAS, what happens if you retire abroad, what happens to that pension. Today we're tackling the other big Canadian pension, CPP. What happens to a Canadian pension plan if you retire abroad? We're going to get into it. You want to stick around.
Yeah, as we know, government pensions are important to everybody. And if you've paid into these things or if you're supposed to receive them, even if you're no longer in the country, you want to know what the best options are. So again, if you want to know about this one or the OAS or anything else we've done, please visit our website at beckerorr.com or like us on Facebook, or more importantly, subscribe to our YouTube channel, become a regular, and get all the information that we always have. But those are the basics to go for. Clint, we talked about OAS and what happens when I'm abroad last time. What happens with CPP? They are not exactly the same animal. They are a little different. Let's get into it.
They are certainly different. OAS, a reminder of the old age security system. No one pays into that directly. It's funded by general tax revenue. That's not the case here with CPP. You absolutely pay into CPP. You make contributions right off the paycheck, and the end result is you get a monthly taxable indexed retirement pension for life. The amount you receive depends on how much you pay into the system. And you can see the contribution rates there for 2021, 5.45% of your income goes in to the CPP pot, up to $61,600. You have income above that, you've maxed out your CPP contribution.
Yeah.
Your contribution is matched by the employer. So you put in 5.45, they put in 5.45. All of it goes into this big pot that gets invested, and eventually you get to draw a pension down from there. If you're self-employed, unfortunately, you put in the full amount, both sides.
Yeah.
So you end up putting in 10.9%. But those are some of the basics of CPP. We'll quickly cover the others here, Kevin.
Yeah, I mean, basically, most people think of CPP, it starts at 65. That's the normal age of starting, but there are variations. Whereas OAS, we proved that you can't start before 65. You do have those options coming with CPP. But before we get to that, maximum pension benefit right now in 2021, and remember this is indexed, at 65 is about $1,200. The average monthly, though, roughly half that at about $614. Yeah. So if you collect and pass away, though, there are other things that go on with the CPP Basics. There is a spousal benefit. How that formula worked out is whether or not you're over or under 65. That will be a scenario. There's also a child benefit, and the children have to be either under the age of 18 or under 25 and full-time. And again, it's a flat benefit that goes on. And again, the other factor that's really nice that we don't usually see in OAS, there is a death benefit for your CPP. Now, that's also a standard amount. It's $2,500, and that's what you're going to get. But there's a little bit more to it than just this. As I mentioned, there's 65 is the normal start age. What else do we have in regard to benefits that are basics for CPP, Clint?
Yeah, so there's lots of options with CPP. We're just kind of glossing over some of the details here, but you are correct. CPP starts at 65. You can take it as early as 60. There's a penalty for doing so, 0.6% per month. So you take it at 60. There's a 36% haircut on the pension you'll receive. You can also delay it. Maybe you take it at 70. Every month past your 65th birthday, you get a bonus, 0.7%. per year of extra. Or if you delay it all the way to 70, you get a 42% top up on your pension. And important to note, that big pot of money, you're putting money in, the employer puts money in, all of it gets managed by the CPP Investment Board, and there's lots of money in there, hundreds of billions of dollars set aside for that pension. So that's the basics there, Kevin. I'll throw this to you. We got that hundreds of billions of dollars set aside. We paid into it. Now we retire in Australia. Are we still getting that money?
Actually, to tell you the truth, we are. If you are retiring abroad, you can get access to this cash. Remember, you paid into this. So the government put money away that you paid into for a retirement scenario. You do have the options to get this abroad. If you're in Australia, which would be a nice retirement, I think, or, Turks and Caicos, anywhere else. I may not want to be stuck in Greenland there, but who knows? There's a variety of different options for where you can go. But yeah, retiring abroad, but there are factors that are involved in how much you get, where you get it, the whole 9 yards. What are some of those, Clint, that we're dealing with?
Yeah, which really comes down to how is it taxed, right? You paid into it, so you will receive the pension regardless of where you are in the world, but how it's taxed could vary, and it's very much going to depend on the country in which you decide to live in. Canada has tax treaties with a number of different countries, which will determine essentially what we call the withholding tax. Now, all of it's taxable. You can't get away from that. So wherever you live, it's going to be added to your total income for that year and taxed accordingly. But there could be this upfront amount called a withholding tax, and that will be determined based on the country you live in and the applicable tax treaty. So I'll dig up a list here so we can see which countries have tax treaties.
And those are the biggest ones, because again, just like free trade where you try to set up something with it, Canada has a variety of different tax treaties around the world. And the purpose is so that you do not get a whole bunch of tax that you have to pay on a withholding scale. And again, there are a variety of different countries that we're looking at. As you can see from the chart here, these are the tax treaties that Canada has as of July 1st. And that what we're dealing with here. So unless you plan to move before a certain time frame, these are the countries that are going to give you a better tax benefit than if you're living somewhere else. So as you can see, a lot of them are names that we've known before: Finland, Greece, the United States, the UK, even down in South America, you're looking at Peru and some of the others. Now, there is that comment there. If you're a resident of Brazil in 2020 and or a Brazilian national, you do not have to file this return, but there are a variety of other options, isn't there, Clint?
Yeah, it does vary by country, so you have to be very specific there. Like there are lots of nuance and details when it comes to tax treaty, but in general, those are the countries that Canada does currently have a tax treaty with, but they're not all the same. It's not as if, oh, it got a tax treaty, so immediately we know exactly what we're going to pay. It does vary depending on the country. So I'll pull this up here so you can take a look. So this goes through all of those countries that we just looked at, each one that has a tax treaty, and it shows you the applicable tax rates. Now, all of this is from Canada.ca, so it's official from the government website, and you can see each country has their own withholding tax on OAS, on CPP, and then even the death benefit for CPP has a different withholding tax. I'll scroll down here so you can see each country. There are some differences. A trend you'll likely pick up on is it's pretty common that 15% will be the withholding tax for CPP and OAS, and then that death benefit is pretty consistent, Kevin, at 25. For some reason, they're taking more off that death benefit. Yeah. And there are a couple exceptions as we get to the bottom here. You'll notice there's a few countries that there are no withholding tax. The UK is one of them, CPP and OAS, no withholding tax on the pension, still a death benefit. United States, completely different. Zeros across the board there. So you could live in the US, not have the withholding tax. And then right at the bottom, you can see any other country, you're not going to get their preferential treatment. If there's no tax treaty, it's a flat 25% withholding tax across the board, regardless of your overall tax rate, regardless of your income. They just take that right off the top. So those are all things to keep in mind. It does get a little tricky when it comes to the tax situation. We'll move on to some of the benefits here, Kevin. You talked about it earlier. There is a survivor, there is a child benefit. How is all that impacted if you live abroad?
Well, actually, it's the same sort of scenario. Remember, the survivor and the child benefit come to you if something happens, or to a spouse, or if it goes to your child because something happened to you. And remember, you paid money into this, so this is money that they still owe you. So these treatments here for the spousal, or should I say for the survivor and the child benefit, will apply to the same tax treaties. So they will be used for those countries, and it will be the same withholding scenario going forward. So if you're collecting this benefit and you're living abroad, if you're living in the United States, of course, there is no tax. But if all of a sudden you're going to Australia, we saw there it was 15 across the board, you are going to have to pay those percentages. That's the withholding tax they're taking off the top. So it's important to know that you have paid money into this one, so you will get it. But there are the tax treaties that we have, which are going to be effective with those tax rates.
Yeah, so you can't afford it, same kind of tax issue, but again, you paid into it, so you're going to receive it regardless of where you live in the world. And then how do you receive that payment? Common question here. So does it have to go to a Canadian company, a Canadian bank account? And the answer is no. That's not the case. So if you're living in Australia and you're like retired there, you're enjoying the warm weather, they will convert your CPP to Australian dollars and pay it to an Australian bank account if you so choose. You have to apply for that, but that is certainly an option. So they'll convert it to your local currency and pay it to a local bank wherever you are in the world. Now, you have to keep in mind, if you don't do that, if you decide, hey, pay it to my Canadian bank in Canadian dollars while you're still living abroad and you're no longer a resident of Canada, that can create a bit of a tax situation of where you file, because now you have income in multiple countries there. But just so you know, you can get it received, or you can receive it, pardon me, the CPP, the benefit, the survivor, all of that in the local currency paid to a local bank. That is a service that Government of Canada will provide for all the benefits of CPP.
Yes, and we can't guarantee that if you are on a deserted island, we have enough carrier pigeons to get the check to you. But as Clint said, you can set these things up, and it is nice because having it in the currency where you're going to live is very important. But again, all these scenarios and everything else, if you want to check it all out, go to My Services Canada, because they are the ones that have all the information on all of this. They have the tax treaties that we have. They have the withholding taxes that are set up, and they will be the place that you want to be in touch with so that you can do this if you are planning to do that. And we do know that there are a lot of snowbirds, or there are a lot of people that do plan to move south of the border once they get to that point, because they don't want the cold winters or anything else along those lines anymore. But
Yeah.
besides Service Canada, what else do we have, Clint?
Chat with your accountant, especially if you plan on living
Yes.
abroad. And I think this, we've illustrated it here. There are some tax complications. We just hit the tip of the iceberg. We're just talking about CPP. It can get even more complicated if you're owning property in multiple countries. So absolutely consult with a cross-border accountant before you make that kind of decision to retire abroad. And if you have additional questions, Kevin, who should they contact?
They should contact us, chatwithclintonandkevin.com. We are more than happy to try and answer these questions. And if not, we do have the sources that we can get to, as Clinton just mentioned, with cross-border accounts and things along those lines, so that we will be able to deal with that. Now, it doesn't have to be strictly on CPP. You can touch base with us on the OAS one we did, or any of the other topics we've had, or if you just want a friendly chat about anything in particular, we'll be more than willing to happy to talk to you about whatever your question of the day is.
Absolutely. Absolutely. So that wraps up CPP. What happens if you retire abroad? If you have other questions, get a hold of us. Until then, we'll see you with the next video. Take care.